Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let introduce myself. My name is Alpino Firnando. This time I will explain about accounting equation formula and how to solve accounting equation cases. The accounting equation is the basis of the accounting system used to record financial transactions. The accounting equation formula can be described in the following way. 1. Accounting equation. Formula: basic accounting equation, assets equals liabilities plus equity, where assets are everything owned by a company that has economic value, such as cash, receivables, inventory and property. Liabilities are debts or obligations that must be paid by the company to other parties, such as business debts, bank loans, etc. Equity, owner's equity, is the owner's right to company assets after deducting liabilities, such as capital, retained earnings and paid-in capital. This formula reflects the balance between the resources owned by the company and the claims on these resources. 2. Detailed explanation of elements in the accounting equation: assets, assets, current assets, cash, accounts receivable, inventory, and other assets that are expected to be used or sold within 1 year. Fixed assets: land, buildings, equipment, machinery, vehicles which have a useful life of more than 1 year. Obligations, liabilities, short-term liabilities, debts that must be repaid in less than 1 year. Long-term liabilities, debt for which repayment takes more than 1 year, such as long-term bank loans. Equity, owner's equity, paid-in capital, money paid in by owners or shareholders. Retained earnings, profits earned by a company that are not distributed to owners, but are kept for reuse. 3. Example of an accounting equation case. Case 1. A new company is established with paid-up capital of IDR 50,000,000. The company purchased equipment worth IDR 30 million by paying cash. 1. Recording paid-in capital, assets increased, cash, by IDR 50,000,000. Equity increases by IDR 50,000,000. Journal, cash, assets, IDR 50 million. Paid-in capital, equity, IDR 50 million. 2. Recording equipment purchases, assets increased, equipment, by IDR 30 million, assets decreased, cash, by IDR 30 million. Journal, equipment, assets, IDR 30 million, cash, assets, IDR 30 million. Balance sheet table. After transaction, explanation. After this transaction, the company's assets consist of cash of IDR 20 million and equipment of IDR 30 million. The company's liabilities are 0 because there is no debt. The company's equity is IDR 50 million, which reflects the paid-in capital of the owner. 4. How to solve accounting equation cases. To solve accounting equation problems, the steps are: 1. Identify transactions that occur and their impact on assets, liabilities and equity in a journal for any changes that occur in the elements of the accounting equation. 3. Analyze the balance between total assets and total liabilities plus equity, ensuring that the accounting equation remains balanced. Other case examples: the company received cash amounting to IDR 10 million from customers for the purchase of goods. 1. Assets, cash, increase by IDR 10 million. 2. Income, equity increases by IDR 10,000. Journal, cash, assets, IDR 10 million. Income, equity, IDR 10 million. 5. Conclusion. The accounting equation provides a clear picture of the relationship between assets, liabilities and equity in a company. Every recorded transaction must ensure balance between the left and right sides of the equation. Thus, companies can monitor and manage their finances effectively.